Hey everybody, Jake and Gino here, and today we are discussing how to buy apartments during a recession. One of the main points that we stress over and over again is to add multiple tools to your tool belt when it comes to multifamily investing. What do we mean by that? Remain flexible. Remain flexible on the buy side so you can stay active in various phases of the market cycle, such as buy and hold, joint ventures, syndication, creative financing, scattered site deals, master lease options, and on and on and on. Now I'm going to get political, not really, but just kind of in my speech. Read my lips. Let me be clear. Are we headed into a recession? Are we currently in a recession? I don't know. I don't have a crystal ball. I'm not sure. Who knows what the Fed does? I think we can all agree that we're in a weakened economy currently. So today we are going to discuss strategies for weathering the storm, remaining active, and we're going to keep that meat coming in on the conveyor belt. So, Mr. Gino, G Papa Funk, G Daddy, what are the keys to investing during a recession?
I want to give a big shout out first and foremost to everyone who's been hyping crypto for the last couple of years. Where's crypto at everywhere? Where's Bitcoin right now? Now, I'm not a hater because I'm losing.
You sound like a hater right now.
I'm not, because I'm losing just like you, but I'm going to be a long-term buy and holder forever. I've got XRP. I've got a little Shiba in there. I've got Stellar. I own it, right? I own Litecoin also.
What is this, like ladies lingerie? I don't know what you're talking about right now. Shiba and XLR.
Dude, you know what? I'm in it. But what I'm saying is it's very volatile. And right now it's getting hammered. Bitcoin's at 30,000. If it goes below 30,000, what's going to happen? Everyone's running for the exits. The stock market is down to 31,000 and change right now. And one of those things I really have to stress, when you're buying real estate, it's buy and hold to the long term. That's how you're going to weather the storm through recession. You need to have your buy rate criteria set up, and they're changing. I personally think we've been in a recession for the last 2 years. It's just that all this money that's been pumped in, supply chain issues, there's a lot of demand, but there's no supply. So that's caused further prices increases. So for me, when I'm looking at real estate, the only two times I care about the value of real estate, believe it or not, is when I buy it and when I sell it. So the buy right component of buy right, manage right,
or maybe a refi, right?
Well, think about it. At that refi, aren't you technically really buying it again? If you really stop and think about it, you're purchasing it at that new price. You're able to extract the value. You like that, huh?
Turning the tables on my ass.
Not to get political here, but seriously. Anyway, down below in the comment section, I want to hear what you guys think about that. When you're buying real estate, when are you worried about the price? Are you worried when you're buying it? When you're selling it? You have to have that fixed rate financing. That's what I'm talking about. If you're buying a deal right now and rates are going up and you're worried in the shorter term, bridge financing may be a little bit difficult right now because all of a sudden rates do tend to go up to 6 or 7% and you're underwriting at 4%. That's real risky. So I think in this part of this market,
current bridge is risky. Like if you have bridge right now, that's the risk. If you have a floater, that's the risk right now. And it's like, we were the stodgy old pricks talking about that. And now it's like people are living it.
You'd mentioned what are we buying right now? We're still buying the same kind of deals that we were buying 6 months ago. This part of the market cycle, prices are still elevated. I think sellers take a little bit of time to realize what's going on, and brokers have been living off the hog for the last couple of years. They haven't had to do much. And you know what? God bless them because they're working through this cycle. But you know what? It's time to batten down the hatches because deals are going to be coming and they're going to have to get more creative. You're not going to have a call to offer on a deal and there's going to be 30 calls to offer. You're going to have 30 offers. So I've got the book here, everybody. Hit me up, jakeandgino.com for a PDF copy of this. This is going to happen sooner or later. We're going to get into creative financing, seller financing. There's tons of students in the Jake and Gino community who are doing seller financing. They're doing it right now. Now, you need to know the SPY technique. I'm going to have you guys write this down. This is important. The SPY technique, which stands for seller, property, and you. You need to know how to underwrite a deal. When the deal does not work out traditionally, that's when you go to seller financing. You don't go up to somebody and go, hey, you want to seller finance the deal? That's not going to work.
Get away from me, jerk off. That's what I'm going to say to you.
You're coming from the seminar, right? So understand it's the seller first. You have to try to solve their problem. There has to be motivation also. You're not going to get a Class A property just built last year on the seller financing. It's not going to happen. And if it does, send me a shout out because I'd love to see that. Not going to happen. Now you're talking to the mom and pop kings here. We've closed over $20 million in seller finance deals, but we've done it at a different part of this market cycle earlier on in our career. And it's coming back, folks, right now. Debt is starting to pull back. Loan to values are starting to drop, so you need to come up with more capital. Deals are getting harder to finance. So this is where the storm is being set right now for seller financing and even for master lease options. You just need to know to look out for motivated sellers. You need to look out to be able to solve those problems. Because you're not solving problems with a property that's got a 96% occupancy. It's rocking and rolling. Rents are rising. Brother. You need to find a little cracked den, a little 25 unit cracked den. But those properties are so undervalued. They're so neglected. You can get them at a good price. You're coming up with a lot less money out of your pocket. So your returns are that much amplified. You're having the seller create a note. And on the back end, you may even buy that note on a discount. So this strategy of creative financing is so powerful. Once again, hit me up, Gino at jakeandgino.com. I'd love to send you out a copy. And down below, I want to hear if any of you on this call right now listening to us, have you guys done a creative finance deal? I'd love to hear your story because it just adds to the power of this technique. Like Jake said, one tool out of the toolbox. You have syndication, you have partnerships. Creative financing is one of those tools. Let's try to learn as many tools as possible because the more tools and the more strategies you have, the more probability you're going to be able to close on a deal, Jake.
Yeah, you got to clean those properties up, though. You do go into the rougher properties, make sure you're cleaning them up, make sure they're in the path of progress. So we're going to recap real quick. Don't get out over your skis, okay? Bridge right now. Look, I'm not looking at bridge right now, but I think even going back 6, 8, 12 months ago, those are the deals that are at risk right now when you got in at 3% on a bridge and now rates have ballooned. Okay. Look, didn't have a crystal ball then, but I knew there was inherent risk locking in there or floating. So one of our finance rate strategies is long-term fixed rate debt. Look, interest rates are volatile. Okay. We want to fix for the long-term whenever possible, minimum 5, but I like 10 years. Okay. I like getting locked in for 10 years. We like thinking in decades. If you're going value add, make sure this is the key. That your future, if you're doing value add, make sure that your future rents, your future market rents that you're going to try to achieve are in line or below current market rents. You've seen a huge spike in market rents. Okay. Rents are up. Don't get caught into the trap of 20% increases year over year. People are underwriting for this and that's how they're going into deals. That's risky. That's like buying on bridge and doing these floaters a few months ago. That's where the risk is. Remember, always no deal is better than a bad deal. Don't force it. Be patient at the plate, okay? And our favorite Lord of the Rings clip. Creative financing is back on the menu, boys. Meat is back on the menus, to Gino's point. Creative financing will start to come back around. Rates are up. It's going to be harder to finance these deals, okay? So again, don't get caught in the trap underwriting for 20% rent increases in perpetuity. That ain't real life. That ain't happening going forward. And ultimately, look, be patient. Don't press at the plate. Deals will come. The market's always changing and evolving. You need to be engaged at all times and have various tools in the belt to make these things work. Again, I'm Jake. He's the G Daddy, and we make it happen. We'll see you next time.